Have you ever been told no by a bank when applying for a mortgage because you don't fit their traditional guidelines or method? Yeah, you might be somebody that's self-employed, maybe a real estate investor, maybe somebody with just a unique income or credit situation. So that's why today we're going to be talking about non-QM, aka non-qualified mortgage loans that actually break this mold of traditional loans and help more people like yourself get qualified for a mortgage loan with actually pretty good terms. So let's start with the basics. Non-QM stands for non-qualified mortgages. These are basically mortgages that don't fit the traditional method or what people call qualified mortgages. This means that A, we may be not using normal income streams such as tax returns or regular income verification ways. We may not be meeting the credit guidelines for what they're looking for, or we may not just be in that traditional loan amount or property type or just credit event that may have happened that may have had to alter what type of non-traditional route or alternative route we may have to go to. These loans are really just perfect for borrowers in a unique financial situation or looking to just do something unique with the loan that doesn't fit that traditional bank tailored loan. So if you got denied before from a credit union, bank, or somebody doing a traditional mortgage, stop, listen, take it in, because I'm about to hit you with a lot of information. The creation of non-QM loans was actually the 2008 financial crisis, where mortgage guidelines were created to be extremely strict, which actually made a lot of people not be able to qualify for a home loan, even though they easily could afford the loan. Because like I said, conventional guidelines are black and white. There is no gray area to play around with. So non-QM loans were created to expand the possibilities of home ownership, to give other people with creative situations, unique situations, a fighting chance. I love these loans. I've become an expert in it over the last time. If you don't know who I am, my name is Gonzalez, mortgage loan advisor. And I'm here to help you navigate these treacherous waters of what non-QM loans are and how you could get approved for it. If you want to know more about me, please subscribe to this page, turn on that bell notification sound, because I'll be dropping videos like this week over week and shorts that are going to actually educate you and inform you as to what we could be able to do for you. Who are these loans really for and who are they benefiting? Let's go down the list of people that could really qualify for this. Number one, self-employed borrowers. Recently, I dropped a video about a specific non-QM loan called the bank statement loan that is perfect for my self-employed borrowers. Go to my page, check that video out if that fits your specific situation. Number two is just real estate investors, right? Real estate investors a lot of times have the cash to back it up and have gotten really creative with fixing up properties, selling them, have huge chunks of cash available, but maybe not regular income streams that allow them to buy these rental properties and assets they want to do. That's where non-QM comes in. Number three is just borrowers with a regular income, right? Are you maybe a 1099 employee? Maybe you're a regular employee. Maybe you're a commission-based only person that has $20,000, $30,000, $40,000 commissions on one month and maybe has zero the next couple of months. But if you average that out, you're making about $10,000 to $20,000 every single month. So you could actually buy a pretty nice home, except on a conventional loan, you absolutely can't, right? Number four is just borrowers with credit challenges, okay? These borrowers with credit challenges could be maybe you had a foreclosure, maybe you had a bankruptcy in the past, maybe you have some mortgage late payments, maybe you just went through some rough times that you're completely out of and you had some significant event that now is not letting you qualify for a mortgage. This is where the non-QM would come into that space. Number five, high net worth individuals, people that have maybe somebody like yourself who has a lot of money in the bank that you could probably buy the house you're looking for 2 times over, except your money's stuck in a stock or an account that you can't touch, or just money that you just don't want to touch because that's what you're living off, right? We can actually just use that in order to qualify you for a home, whereas traditional way, you'd have to show income to be able to pay back that mortgage. And lastly, foreign nationals. ¿Dónde están mis extranjeros? Yes, foreign nationals, people that live in other countries that don't document any U.S. income, but still want to be able to purchase that U.S. real estate because it's such a lucrative and high net worth investment that everybody watching this video should be making. So let's talk about non-QM versus traditional loans. What's the difference and how can we put them side by side, right? For a non-QM loan and a conventional loan, let's talk about the income requirements. For a conventional loan, you're going to need at least a 2-year history of employment with a current employment happening. This could be either paid checks hourly, weekly, whatever it may be. We need to document a 2-year history and an ongoing reason of it, right? These are documented to W-2s, tax returns, whatever it may be. Now, With non-QM loans, we have a variety of documentation programs that we can utilize. We can utilize only bank statements. We can utilize just your W-2. We can utilize literally a written verification of employment from your current employer to help you purchase the home. It's really that easy, and there's so many opportunities to do it. Number two, credit requirements, okay? For a traditional loan, your credit requirement, depending on the program that you use, can usually only go down to about 620. Now, on all of these, you're not gonna be able to have late payments on your mortgage, any bankruptcies, any foreclosures within a certain amount of years. For example, if you got a foreclosure, you're probably not gonna be able to buy a home for the next 4 to 7 years. All right. However, if you had a foreclosure recently last year because of some traumatic event that you got out of, and now you're in a position to purchase again, these non-QM loans will actually allow you to purchase with less time than regular QM loans will. Number three is your debt to income ratio. Your debt to income ratio is very simple. It is how much debt you pay on a monthly basis versus how much monthly income you're bringing in. Conventional guidelines are very strict on this. Maximum of 50%, including your new housing payment. On non-QM loans, you have some loans that are flexible enough to go up to 55% and allow you to actually have a little bit more breathing room to purchase this home. Number four is just property types. On non-QM loans, you can actually purchase properties over 4 units, some up to 10 units, whereas on a regular conventional loan, you're capped at 4 units because anything other is considered a commercial property. And number five is just flexibility, right? The flexibility of a non-QM loan is the fact their guidelines are not just black and white. Each non-QM lender has their own set of guidelines and rules, which are very flexible because they're sold to a different investor. I don't want to get too deep into this right now, but just know that the possibility of getting exceptions, right? Because maybe you don't meet the exact credit score, but you're off by 2 or 3 points. And I could say, hey, because of your other compensating factors, I think we can go ahead and get this exception where you need to. Whereas on a traditional loan, that paper is black and white. They're going to say, hey, if you don't have enough money or you don't have the credit score that we require, we're not doing this loan for you at this, and boom, no longer approved. So don't you want to have a fighting chance or more of a fighting chance, especially if you've been told no before? So before we get into the benefits of a non-QM loan, if you really like what you're seeing in this video, please subscribe below, drop a comment below. Let me know if you have any questions on what we just spoke about, because it is a lot of information, and probably others just like yourself in your same similar situation, maybe going through the same questions or having the exact same issues. And you, yes, you could be the one to help them, all because of your question. So subscribe, ask, and turn on that notification bell because we're going to be dropping content like it's hot. So let's talk about the benefits of the non-QM loan, and let's just reiterate what those were. Number one, no need for traditional income verification. Number two, flexible loan terms. Yes, you can do interest-only options. You can do adjustable rate mortgages. You can do 15 years, 30 years. A lot of really cool options on this. Number three is that easier qualification for borrowers with harder credit events and just people that you just are not financially uniquely challenged, right? Number four is higher debt to income ratios. Number five is options for a wider range of property types. And number six is accessibility for self-employed individuals and investors. That's my main focus. I'm here to help self-employed individuals and investors really qualify for what they need and how they need. If you saw a lot of information from this video and you're ready to explore your non-QM financing options, give me a shout. My information is actually below, or you can go directly on my YouTube page. And that's my direct cell number. That's actually my direct email. And I'm actually available on my phone 24/7. I encourage you and I implore you to come in, qualify, because what happens is on non-QM loans, I've dedicated my life, my current mortgage career, to really understanding how these loans work, to really helping those that are not being helped by the banks, by the credit unions, by helping those who have taken on the American dream to open up their own business or taken opportunity and are still yet being told no by the big financial institutions that they cannot buy their home. That's what I'm here for. That's what I'm here to help for. So take advantage of this and let's go from there.